Right, well, China advances towards dismantling zero-COVID controls, pulling back many of its quarantine and testing requirements following nationwide protests. And as the country shifts towards recovery, senior Chinese officials are reportedly considering an economic growth target of around 5% for next year. Now, this is a very interesting, an interesting point here, because we know that China does rely on these growth targets. They do everything they can to get there. A lot of people wondering, though, how realistic this is, given how much it's still going to take with this very gradual reopening right now.
Yeah, Rachelle, this really gets to the heart of the question that I have in what is playing out over in China, which is the timing of all of this. Why now in terms of easing those COVID controls? Because when you think about it, they have seen the biggest surge in case counts since the start of the pandemic, when we saw that initial surge out of Wuhan. The Chinese government over the last 3 years has spent those years defending its zero COVID policy, saying that it was essentially an all-out people's war. And then today we heard the state council say essentially that this was a response to strong reaction from the public, which, Rachelle, we should point out, come as close to an admission as you'll get, I would argue, from the Chinese government that, yes, we are responding to the protests that we've seen over the last few weeks. Now, there's another story that we are watching, which is what you pointed out. It is the economic picture. We started out this year with a 5.5% target from the Chinese government. Well, that's since been pulled back significantly, some saying 3%, some saying sub 3%. And you have to wonder, now that we're getting these reports that senior Chinese officials are considering a 5% growth target for next year, are we at that tipping point where the economic pain is simply too much for this COVID policy to continue? Now, worth noting, when you look at the market reaction today, not as significant as you would have seen in the past when China has, or if there were any hints of China shifting its policy. But I would argue part of that is because the Chinese government's in a bit of a dilemma. I mean, you could pull back on the COVID restrictions, and yet that risks seeing those case counts go up when China has relatively kept its case counts low. And yet, if you keep the policy in place, we're talking a further pulling back of the economy. So it really is kind of China being painted in a corner. It's going to be interesting to see which way things go at a time when we're seeing a global economic pullback.
And you raise a good point, because I think investors have seen the rug sort of get pulled out from under them when China started reopening, then cases went up and there was a reversal. It does seem, though, this at the national level is at least a first move for China in really having this coordinated effort to undo its zero COVID policies. But I think investors don't want to get burned. And I think they obviously have other things to focus on. They're still looking at the Fed. They're still looking at what's happening with inflation data. So I think because their interests are spread quite a lot right now with that focus next week on what we might hear from the Fed, I think perhaps investors not quite as excited as they would be. I think a lot of caution here. And we did see that Morgan Stanley did upgrade China stocks from equal weight that it's held since January of 2021, now holding it to overweight. They're bullish, but they're cautious, I think, is the theme right now. Because as you can see there, the number of lockdowns that we're seeing in some of these big Chinese cities, they don't have the capacity at the moment that we saw at the beginning of the pandemic with these pop-up hospitals to perhaps manage what they might see in intensive care units. So some cautiousness here for sure.
Yeah, I mean, you're certainly right to point out that there's a lot weighing on the markets right now. I mean, it's not just the China story anymore. It is, of course, the Fed with the FOMC meeting coming up next week. It's the global rate hiking environment if you look at central banks around the world. But also, if you look specifically at China, I mean, if you think about where these case counts are going, there are concerns about vaccine hesitancy, whether in fact they can get those vaccine rates up, especially among the elderly, and then whether in fact the vaccines they have been pushing domestically are really enough. You could argue the science doesn't necessarily point to that. Are they in development of a domestic mRNA vaccine? I mean, there's certainly a lot of questions here. And again, I mean, China may say, look, we hear you protesters, we're going to pull back, we're going to start to ease these restrictions. That doesn't necessarily mean that COVID's going to go away as a result. So it is an interesting balance that, I think a lot of investors, American companies, especially that are affected by it, are looking or watching as well.
And I mean, when you think about all the disrupted supply chains that came from China not reopening as fast, obviously we're seeing some operations that Apple is considering moving to India. And a lot of these countries that have exposure there, you think of Tesla, a lot of them have a lot of questions about what happens to these supply chains while we wait for China to reopen, because the demand is still there for electric cars and for iPhones. But what can you do if the factories are under lockdown and you just can't get the production done at the end in China?